President Trump spoke to the country last night and laid out three major financial actions that he says could impact millions of Americans. And if you're over 60, the real question isn't whether it sounds positive at first glance, but whether it truly changes anything in your day-to-day life. Before we go any further, take a moment to hit the subscribe button so you don't miss future updates. And please like and share this video so it reaches more people who truly need this information. He talked about new checks being sent out right away, tax changes that could lead to much larger refunds in 2026, and big changes at the Federal Reserve intended to bring down high costs nationwide. All of it is being presented as a financial win for everyday Americans. But as someone who has spent over a decade helping seniors protect their savings and make steady, confident choices in retirement, I want to slow things down and go through this carefully, clearly, and without hype. Big announcements often create confusion, and confusion is what leads to costly mistakes. So let's take a closer look at what was actually said, who truly benefits, and what it really means for your money, especially if you're living on a fixed income and planning cautiously for the years ahead. One of the most attention-grabbing parts of the announcement involved money being sent out immediately, which is why it dominated so many headlines. The president announced what's being called a warrior dividend, a one-time payment connected to tariff revenue and recent budget changes. According to the address, more than 1.45 million active-duty military service members are expected to receive a $1,000 payment before Christmas. That amount wasn't chosen by accident. It's meant to symbolize the year 1776, honoring the founding of the nation. The administration says this money is not coming from new borrowing, but instead from tariff revenue and savings tied to recently passed legislation. That distinction matters because it means this payment isn't being added to the national debt in the same way past stimulus checks were. For those receiving it, this is real money delivered quickly, and it can help cover immediate expenses. But this is where it's important to pause, especially for seniors watching from home. This payment is limited in both who receives it and how long it lasts. It applies only to active duty service members. It does not include veterans, retirees, military spouses, or families who are no longer actively serving. And it's a one-time payment, not an ongoing benefit. That means it may provide short-term help, but it doesn't change anyone's long-term financial picture. For retirees, that distinction is critical. Long-term stability comes from predictable income like Social Security, pensions, retirement savings, and controlled expenses, not from single checks that may never happen again. It's also very natural for seniors to feel a quiet concern when they hear about checks being sent out and wonder why it doesn't apply to them. That feeling isn't about entitlement. It comes from years of careful planning while watching costs rise and income stay mostly fixed. Those feelings are valid, but it's important not to assume this announcement signals broader payments for retirees or Social Security recipients. Right now, there's no indication that this payment extends beyond active-duty military members. Understanding that clearly helps prevent false expectations and financial decisions based on hope rather than facts. Another important piece is how this payment is funded and why that matters going forward. Because it's tied to tariff revenue and specific budget conditions, many analysts are questioning whether this approach could realistically be repeated. Tariff revenue can rise and fall. Budget savings depend on shifting political priorities. That makes this more of a targeted, symbolic gesture than a new financial program. For retirees, that's actually a helpful reminder not to rely on government announcements as income, but instead to focus on what you can realistically plan for and control. So while headlines focus on new checks, the deeper takeaway for seniors is this. This payment does not directly affect retirement income, Social Security, Medicare, or long-term tax obligations. It doesn't lower monthly expenses, and it doesn't change how most retirees should manage their finances today. That doesn't make it meaningless, but it does mean it should be viewed calmly, without urgency or emotional reaction. Financial peace in retirement comes from clarity, not headlines. And moving forward, the more important questions won't be about one-time payments, but about how tax changes and interest rate decisions show up in your monthly budget. For seniors watching all of this unfold, the most important step right now is separating what sounds exciting from what truly affects your daily finances. A one-time check, even a real one, doesn't change retirement planning in any meaningful way. If you're retired or close to it, your financial stability depends on steady income and manageable expenses. That means Social Security, pensions, savings withdrawals, and healthcare costs matter far more than announcements that may never apply to you. When major financial news breaks, it often creates a sense of urgency, as if something must be done immediately. But for retirees, the smartest move is usually to pause. Acting too quickly or changing plans because of headlines often causes more harm than good. Over the years, I've seen that financial stress rarely comes from a lack of money alone. It usually comes from uncertainty. When information feels overwhelming, people start doubting themselves and worrying they're missing out. But retirement isn't about chasing every new promise. It's about protecting what you've already worked hard to build. So, when you hear about new checks or bold economic promises, it's fine to listen. But it's just as important to ask one simple question. Does this change my monthly income, my taxes this year, or my essential expenses? If the answer is no, then there's usually no action required right now. That perspective becomes even more important when we move to the second major announcement, which involves taxes and the promise of much larger refunds in 2026. This part of the speech has created a lot of excitement, especially claims that next year could bring the largest tax refund season in history. The administration says recent legislation includes no federal tax on Social Security benefits, no tax on tips, and no tax on overtime, potentially leading to higher refunds for many families. On the surface, that sounds like a big win. But for seniors, especially those on fixed incomes, it's important to understand what tax refunds really are. A refund isn't free money. It's simply money you overpaid during the year and get back later. A larger refund doesn't automatically mean you paid less in taxes overall. Often it just means more was withheld from your income. For retirees, that matters because excessive withholding can tighten monthly cash flow, even if a refund arrives later. What most seniors benefit from isn't a bigger refund, but steadier income throughout the year. Another key factor is timing. Even if these tax changes move forward, most wouldn't affect returns until 2026. That means they don't change your taxes this year or next spring. Until the IRS releases official guidance and updated withholding tables, it's impossible to know how these changes will work in real life. This is where patience becomes a financial advantage. Adjusting plans too early can lead to surprises later. There's also an emotional side to tax headlines. Hearing about no tax on Social Security can create hope that financial pressure will ease quickly. And while that could be meaningful if fully implemented, it's still a proposal tied to legislation, details, and timelines. Until those details are confirmed, it's best to treat it as a possibility, not a guarantee. Retirement planning works best when it's based on confirmed rules, not expectations. The third major announcement focused on the Federal Reserve and interest rates. President Trump said he plans to appoint a new Federal Reserve chair who supports significantly lower rates, linking that to lower borrowing costs and improved affordability. For people with large loans, that can sound encouraging. Lower rates can reduce payments on mortgages, auto loans, and credit cards. But for retirees, there's another side. Many seniors rely on interest income from savings accounts, CDs, and money market funds to supplement Social Security. When rates fall, that income often falls too. A savings account that once provided a helpful boost can slowly shrink. This is why interest rate changes must be viewed carefully in retirement. What helps borrowers doesn't always help savers. Rapid rate drops can also pressure retirees to move money into riskier investments, which is rarely comfortable or wise during retirement. After the address, the administration highlighted broader economic improvements, including lower inflation, declining prices in some areas, lower gas prices, rising wages, and strong employment. On paper, it sounds positive. But many seniors still feel a gap between national statistics and their own expenses. Housing, medical care, insurance, and prescriptions often remain costly. That disconnect is real, and you're not imagining it. National averages don't always reflect individual experience, especially for retirees on fixed incomes. That's why financial decisions should be based on your own numbers, not headlines. Progress can happen overall while certain costs remain stubbornly high for seniors. As we look ahead, the key things to watch are follow-through, official IRS guidance, and leadership at the Federal Reserve. Announcements matter less than execution. For seniors, patience and clarity are far more valuable than reacting quickly. When you step back and look at everything together, it becomes clear that while some groups may receive checks and changes are being discussed, daily life for many seniors hasn't changed overnight. Costs are still high, and financial security still depends on steady income and thoughtful choices. You don't need to rush. You don't need to react to every headline. Retirement isn't a race. It's a season that deserves calm, clarity, and care. If walking through this together helped you feel more informed or at ease, I'm glad. Please like, share, and subscribe so this information reaches others who may have the same concerns. And feel free to share your thoughts, because your experience might help someone else feel less alone.